This is how I time my trades to perfection using the Bible or the commodity volatility index, and my win rate is currently over 97%. And this year I haven't lost a single trade so far. So it's been pretty good. I've been using CVOL for over 2.5 years now. And again, CVOL is just the commodity volatility index. And I'll go over a few examples so you'll know exactly what I'm talking about. But this is specifically if you trade commodities and you trade options on commodities. And I use CVOL to estimate if the options are relatively overpriced or not. So basically we want to sell overpriced insurance, and then when CVOL goes down, we make money on the options getting cheaper and theta decay, of course. Now I specifically look at the CVOL for the past 3 months. I don't look at the 1 year or 6 months. I look at specifically the 3 months, because with commodities, or specifically the ones with seasonality, even 3 months might be too much, just because things change so much. But 3 months is the range that I found to be the most accurate to look at. And then from there, a good CVOL for me is a CVOL which is at the upper 50% of the 3 month range. And again, we'll go over a few examples in just a second. But this is how I know if the CVOL is good or not. It's maybe very similar to looking at IVR for 13 weeks, give or take, but it's not the exact same thing. So I do prefer CVOL over IVR. Now, if CVOL is good, if it's over the 50% or at the upper half of the 3 months range, I'm going to go ahead and check the fundamentals. I will check if the news are non-critical news and the CVOL is good, then it's an entry point. But if the news are critical, I will not consider a position. So again, first thing is I want to look at the 3 month range. I want the CVOL to be at the upper half of the 3 month range. Then I'm going to look at the fundamentals and determine if there are non-critical or critical news that moved the volatility upwards, because volatility will not just go upwards on its own. Now, non-critical news examples is, the grain past export reports might be good or bad. This is news of the past, has nothing to do, no indication for the supply and demand imbalances for the future. Weather concerns usually are non-critical, and pretty much non-geopolitical news and everything else. For the critical news examples, for example, if we have Middle East conflicts, then obviously we might think about crude oil, for example, right? If there's a copper mine collapse report, this is pretty critical news. It can really affect the supply of copper, right? Tariffs can really also change the supply and demand balance and more. So this is kind of the first thing that I do, this is what I do every single day to kind of figure out if I have an opportunity or not. So this is the CVOL website, the CME Group CVOL website. I'll link it in the description. You have to sign up. It's free. It doesn't cost anything. And we can take a look at the products over here. So let's go over all the products that I trade and analyze each and every one of them. And there is a 15 minute delay, but it's not a big deal. Now, let's go over metals first. So let's go over gold. So this is exactly what I do every single day. So I would go from 1 day to 1 year, and I change it to 3 months. And then let's put the underlying off. So this is the previous 3 months of CVOL data. So obviously the CVOL is really, really low currently, right? So the top range will be this point, and the bottom will be this point over here. So anything in the upper range, which we actually just had a spike here, would have been really good entry. And you can see price CVOL just went down. You would have made quite a nice amount of money. Let's take a look also at silver. So do the same thing, 3 months. So same thing with silver. It's pretty low, but you can see the range. You can see the upper point, the lowest point, which is somewhere here, or actually it's now somewhere here. Then you want to approximately have a CVOL that is at the upper half of that range. And if we take a look at copper as well, and I think we should have a product which is at the upper range. Now, copper obviously had some tariffs situation going on, so it has reacted a bit differently. So I'm not necessarily looking for anything, closer to the upper half here, just because what happened here was the import tariffs on copper. So this is kind of an outlier move, right? So I wouldn't really do anything at this point until we have a way more clear picture because the fundamentals currently are that there's still import tariffs on copper. They exclude some of the products, but again, this is not something I want to get into a position right now. Let's take a look at crude oil now. So crude oil, again, I'm not gonna look at this as the top point, because again, this was a pretty big spike in CVOL. So for me, the highest point will be somewhere here. So even if CVOL is somewhere around this point over here, let's say, over the 42, 43, might be a good CVOL, but then we need to see the fundamentals, what news drove it, and what's going on with this product. Are there any active conflicts, yes or no, and what's going on with natural gas here. So natural gas, if you look at this range over here, so this was a pretty okay CVOL. Obviously, ideally we would want maybe something a bit higher, but it was pretty okay. And actually, I think during the day it was higher, the CVOL, because it just shows you the CVOL at the end of the day. So it would have been a good entry, and then again, CVOL is dropping by, and could have been a good trade to take. Now the other two products that I trade are wheat, which obviously you can tell clearly CVOL is really low, not really a good candidate. And we have soybeans, which is a position actually I just opened when CVOL was actually a bit higher. It was a bit higher than this, and now CVOL dropped, and the position is doing somewhat well. So you can see clearly the range that I'm talking about, the 3-month range. So this is it for this video. Hopefully it was pretty clear of how I start my journey to find a good position. It's all based on CVOL. So this is like the Bible. If this is not perfect in my eyes, which I just explained, the most optimal situation, then I'm not gonna go ahead and look at anything else. This must be right for me to open a short strangle, or really any position that relies on volatility, or where I have a really big edge of volatility is higher. So thank you so much for watching. Hopefully this video was really useful, and I will catch you in the next one.